Good morning, ladies and gentlemen. Thank you guys all once again for tuning in. As always, we got quite a busy morning. There's nowhere, all the stocks that are going to be kind of watched throughout the day. There's so many, you just couldn't possibly put them all in the title. So I put kind of the two main ones that I think I might watch for the day, and then there's many others. What's going on, Dennis? Lost one. Good morning, guys. Hopefully you guys had a good morning and good night or whatever. Anywho's, so quite a few things we're going to keep an eye on today. Majority of them are all going to be earnings reports. If you're looking at AMD, NVIDIA, Facebook, BABA, Apple, pretty much any big tech, big large cap stock that's heavily weighted within the market, majority of those are going to be up today because the overall market had a nice gap up and short squeeze overnight. So if you're looking at any of those stocks and they're up, primarily because the market is up as a whole. So starting to see a lot of those stocks kind of in the green for the day, which is nice to see. And it's nice to see the market up. I can't complain about that. Right? You can never be mad when the market is up, unless you're short and you're getting squeezed. Then I guess you could be mad. But other than that, you should always be happy if the market's up. Okay. So let's get into it. This is not something. Actually, this probably could be. Now that I'm looking at it, Momo probably is going to have a pretty. I could see this having a decent day, because the day after earnings, it pushes back up. It's just over multi-day resistance. Actually, now that we're on this, you might as well keep Momo on watch for a long. Actually, I'll probably watch that long bias today myself too. Yeah, it's not bad. Anyways, all right. So first one on the list is GES, GES. So there isn't too much volume on GES right now, but ideally it's pretty straightforward here. If this picks up in momentum, has enough volume, and things form and trade nicely at the open, there's a strong chance we could break over kind of the 1750 level and start pushing up into 18, maybe even 19 on the day. I don't really think that GES is going to have a tremendously big day, but I do think we could see a little bit more to the upside than what we're getting right now. If it's failing to get over that 1750, then of course it could just turn into like a short trade. But for right now, I'm going to stay on the long bias side of things with GES, and the market's up today, so going to stay on the long bias side with GES today. But it's one of those stocks that it's fairly cheap, so it is affordable. Most people could probably afford some shares on this. So if it does give us a decent move, this could be something that I could size up a couple thousand shares on and probably get a good, decent win if it does give us that nice long move. So really just watching GES's earnings report for a move over 1750, maybe into 18s and mid 18s, 19s, around that area would be nice to see. So still keeping an eye on it. Again, we are right at resistance, so that is something to mind you of. We're right at some short-term selling resistance. All right, we'll touch here on Williams-Sonoma, and then we'll do like a quick run through of all the other just random stocks that are kind of moving today. So Williams-Sonoma reports earnings too. Right now they're kind of just hanging out. They're kind of down, but it's not anything too aggressive, right? It's just kind of a push up, push down, consolidating in the middle. And for the past couple days, we've pretty much seen all of these similar setups all push to the upside. So for right now, I think I'm just going to keep an eye on Williams-Sonoma. I feel like it might be flying kind of under the radar because it doesn't have a whole lot of volume pre-market and it doesn't look like it's moving too much. So I think this could be a situation where we see a nice long day out of it. But it's just kind of being unnoticed because it doesn't have crazy great formation here this morning. So anyways, keeping an eye on Williams-Sonoma, looking for some long plays. I mean, if you're looking for entries, I mean, it could very easily be like over 68.79, which is kind of some of these topping candles here throughout pre-market trading. So into this kind of like 69 area could be, kind of that long squeeze move. And if it does have a really good move, anticipate it to stop right here at about 73.25. This would be a similar play like Tiffany's yesterday, where not same formation, but you can see we kind of went down, squeezed all the way up, and then where did it stop? Right towards your pre-market highs where it started to kind of top out. So again, that might be a situation, same thing on Williams-Sonoma today. Okay. Can I take a look at Wix? Surely. So Wix has been on a downtrend for the past couple days, and it's actually breaking that. I'd watch that short bias. Yeah, I mean, it's breaking down this multi-level consolidation bottom, right? It's starting to break that down. So it could lead to an actually really good short trade. Your next kind of consolidation or structured support is going to be down at 131. So it's about an 8-point move until you hit really the new structural support system if it truly breaks down. So I think that's worth watching short bias for now. Let's see what the daily chart looks like just out of curiosity. Yeah, it's just kind of been flat, and the momentum's been trending down. Ooh, sorry. Momentum. Yeah, I think it's probably worth watching short. You could lead into a good short. I mean, it's rolling over, starting to break that support system. Yeah, I would probably watch it short bias. NRZ, surely. $14, kind of at a bottom, kind of. It's arguable that you could be kind of into a bounce level. The price action did break down briefly, but that happens all the time. I'd watch that long bias today. That to me looks like it's in a long formation setup where yesterday it's starting to bottom out, hitting people's stop losses here. So again, guys, remember, I don't need to go into the spiel, but anyways, looks like it hit some stop losses yesterday and triggered a bunch of buys. So a lot of people are coming and buying up as we broke down support. So I'd probably watch NRZ long, and you could also watch this probably for a swing trade at this point. Try to reverse direction for the next couple of days. Yeah, and there was like a slight bullish divergence. Excuse me, that's the wrong tool. There was a slight bullish divergence here from, that right there. So yeah, I'd probably be on the more of the long side than I would be the short side for NRZ right now. Good morning, Dan Lee. Shopify. Is the SPY going to continue up? It could continue up. Really, the play here is the SPY is in a range from like 290. I just gotta look at it. Let's see. So yeah, the SPY right now is just in a big range, high-low range, and there's really no play until it's up and out, there's always a play, right? Short on resistance, buy on support, but really the ultimate key levels are really over 293.80, 294, and below kind of this 284 to 282 level. So it's really just trading in a high-low range right now. So the likelihood we see this come up and break out of 293, 294 today is very unlikely. It's possible that it could break out over 293, 294 tomorrow or the next day, but again, very unlikely that it does it today. So again, that's really it. You're in a high-low range. Over 294, we'll have a big move, most likely because there's been a lot of people shorting tops. So if we get over the 294s area, it could very easily lead into a short squeeze. And then you've had people buying the dips here, here, here. So if it breaks below the 284, you could get a panic sell-off and a bunch of people stop lossing out for a move lower. Only stock I've really been watching for a swing trade is CGC, and then the only stock I'm currently swing trading still is NSP. Burl, they reported earnings. They're up about $17 per share today when I first looked at them. So far, they've gapped up, consolidated sideways. That is another stock we're watching. As long as the gap up stays completely flat and sideways, it's pretty much a gap and go strategy play there where you're basically buying over pre-market resistance or shorting below pre-market support. So I think Burlington's still a good stock to watch. PSTV, Kevin, you're right. PSTV has been having kind of a good couple days. It had a really good move like about a week back, bottomed out, then it's been bouncing back up. I'm just leaving that one alone, not trading with it. Recently, it's been trading on pretty low volume. The spread's kind of wide, and so it's not even, to me, it's not worth my while putting in money on a stock that's trading low volume and has kind of a wicked spread. It could just set me up for a bigger loss than is even necessary. So really, there's no point for me going out there trying to make money there when I can make make it elsewhere with, I guess you could say, less risk. But you're right, it has been moving good, and it is a pretty volatile stock, so it is something you can make a good chunk of change on if you do it correctly and aren't too worried about the spread. Brad, so I can't remember the law, but there's a law in place in the United States. So it's basically where your citizenship is. That's how it works, right? So if I just decided to travel the world for the next 3 years, my citizenship's still in America, so I still pay taxes to America. But since I work outside of the country and I'm constantly moving around and don't have like a specific, primary residency, then I actually pay less taxes and I get a big tax break on all my income. So it is something that some traders do and some people do for business. They can travel around. They just kind of travel around wherever they want, stay for a while, move to this place, go to that place, and it actually helps save them significant amounts of money on taxes. So it's like I could do that and then just take all the money that I would be spending in taxes and use it to travel. It's probably something I should look into, honestly. William, nope, not watching LCI. After watching how it traded yesterday, it's not trading in a manner that's really fun to trade, so I'm not watching anymore. Thoughts on UGAS? I don't really trade UGAS or DGAS personally, so, again, I could look at it, but again, the best thing you can do for UGAS or DGAS is just always watch the natural gas market and the natural gas futures and whatever the natural gas futures are telling you to do. That's what you should do with either UGAS or DGAS. It is Thursday, right? So the natural gas report comes out. Everybody gets all crazy and hyped up over the natural gas report. I've never really traded. I maybe traded it once, but I never really cared to trade the natural gas report because by the time that even comes out, the thing's already moving, so you basically miss the move anyways. So I've never really been a big fan of trading the natural gas report. I don't see a whole lot of value in it. I feel like it's just something to get excited about, thinking that you're going to have this really great trade, and then more oftentimes than not, you're just disappointed. So not really crazy about the natural gas report in my perspective. Well, in reality, crude oil doesn't actually affect the SPY because, it can, but crude oil in reality probably isn't the biggest factor to the SPY because, again, if you're looking at the SPY, you're looking at the top 500 biggest market cap companies again. So oil is a very small portion of those companies, right? Or it'd be a very small portion of the S&P 500. So everything has an effect one way or the other, but it's not necessarily dramatically bigger than anything else. Just because oil is going down doesn't mean it's going to just completely tank the market and vice versa. I guess, Peter, that's going to be one of the main ones that I'm watching today. Can you explain the pros and cons of leverage ETF? The pros of leveraged ETF is that you can get a bigger percentage move in a leverage ETF. That's all going to sound really odd. Okay, let me rephrase this. The pros of a leveraged ETF is that a leveraged ETF moves more than the underlying commodity or security that it tracks. So again, if you're trading a 3 times leverage gold ETF and gold moves like 1% of the day, you could expect that your leverage ETFs, if it's a 3 times leverage ETF, it's probably going to be moving like 3 to 4% on the day, close to. So it just moves bigger than the actual underlying commodity security that it tracks. That's really your pro, is that it can make a bigger move, right? So you can make more money on the move. That's really the only pro to it. And then the cons are that they're not used for investing, shouldn't be used for investing in theory, and then they have a decaying factor because of the way that they're built and the mechanics of them to make them leverage. There's a lot more fees and transactions they actually go into it, which causes a decaying factor to the ETF. So over time, you'll always notice that a leverage ETF, whether 1.5, 2, 3 times leverage ETF, will naturally be trending down versus just a regular ETF is just going to stay normal price and it will move based on the underlying equities, securities, or commodities that they track. It took me a couple of years to be confident, really, really confident in trading. Yeah, see, Astrid, TVIX, a lot of people go, TVIX is hard to trade or TVIX is scary. And it can be, but it's generally because people don't really understand what it is they're actually trading. They think that TVIX is directly related to the market, which in reality it's not. So they think that just because the market goes down, that TVIX is going to go up, and when in reality that's false. It normally does that, so you're on the right track of thinking. But again, TVIX is directly correlated to the VIX, which is the volatility index, which is basically the implied volatility from the options market based on the overall market. That might have got really confusing, but basically all it is the VIX is the fear gauge, and whenever the market drops, the VIX goes up, and then the VIX affects TVIX, and TVIX goes up and or down. On-demand feature on Thinkorswim is better than paper trading, in my opinion. It's really the same thing as paper trading, but I think it's better because you can go back in time and you can pretty much do it whenever you want. And so it's like you could be up at 1 o'clock in the morning with nothing to do and just start trading. All right, so now that we kind of covered a good amount of questions here, I'm just going to run you guys through pretty much all the stocks that are on my mind today quickly. I might forget one or two here, but we're going to do this fast. Give me a second. So we do have, we should have both of dollar store earnings today. So DLTR reported earnings, something to pay attention to if you like the dollar stores and you like the price of the stock. Dollar General reported earnings. This one appears a little bit more bullish than the other. Best Buy reported earnings today. That one's going down right now currently. NTNX reported earnings. That one's just up decently. This one's 23. This was also, I forgot to mention, this was also going to be another one that's on my main top watch because it had a nice push, nice grind, and it's just kind of holding. And this is another one that's kind of at, I don't think it's actually at a really big resistance. It's kind of just at a breakdown. Yeah, this doesn't really have any super significant resistance. So this is another one I felt we could see a pretty easy push on. So going to be keeping an eye on NTNX today too as well. Can't really think of any other more. I think that was pretty much it. I might have missed a few. You said JKS. Yeah, like here's another one that reported earnings, or reports tomorrow, excuse me. Yeah, so I think those were pretty much all of them. Dollar Tree, Dollar General, NTNX, Best Buy, and there might be a couple other ones that I'm probably missing, honestly. I mean, yeah, you could swing. So basically what you're asking, Swing Trader, is that he's asking, can you swing UGAS in September and just wait? I mean, yeah, so basically what you're doing is playing a seasonality trade, which is actually good. So yeah, I mean, I don't see why not. I mean, you could buy into like UGAS or DGAS, anticipating that as winter rolls around, there's going to be a natural gas shortage, and then the prices of natural gas are going to go up, or there's going to be a higher demand for natural gas. So, of course, the prices are going to go up, which then should affect UGAS or DGAS, or, UGAS in a positive manner, which causes the price to go higher. People do that, so it's something to consider. Naturally, we do see the natural gas market go a little bit higher during the wintertime, of course, because it's colder and people use more gas to heat their house in those times, so makes sense. What about a stock split? So it depends on what stock split you're talking about. If you're talking about a forward split, then what's going to happen is the company is going to issue more shares available on the market, which is then going to decrease the share price and make it more affordable for investors to buy. That's called a forward split, and forward splits don't happen very often, but if they do, you know that the company is probably doing very well. Reverse split is the exact opposite, where the company actually reduces the amount of shares on the open market, so basically taking away from the supply, right? And then the price goes up because, again, there's less there, right? So again, if you had a stock trading at $1 and there was 100 shares on the market, and the company goes to reverse split and then takes away 50 shares from the market, so now there's only 50 available shares, then your share from $1 is going to go up to $2, right? So a reverse split increases the share price, reduces the amount of shares available. But Chad is right. Splits are generally terrible because more often than not, it's a reverse split, and a reverse split is bad. Forward splits barely ever happen. Do I ever use tick charts? No, I do not. A lot of times you'll see reverse splits in ETFs or leverage ETFs, and that's because of that kind of decaying factor. Naturally, they kind of trend down, so they'll do a reverse split, raise the price of it. It happens all the time in ETFs. That's why if you go and like look at JNUG or something, I don't know if it's that one for sure, but you'll go look back. Like if you go look back at the chart on TVIX, I think is one, right? If you look back at like a 20-year chart or something, or however far it goes, you'll see that the price was like 16,000 or something stupid. Let's see, 10 years, monthly chart. Yeah, the price was, I don't even know what that is. Was that like 28 billion or something? Was that would be, yeah, it's like something ridiculous. So yeah, there's no way on planet Earth was this ever that expensive. Just every time you do a reverse split, it just makes it appear that it was more expensive. Would I short Best Buy today? I mean, possibly if the setup forms right. Just because it's down pre-market doesn't mean that it has to continue down. Basically, it would have to come into the intra-time setup. So it's a possible short on the day. TVX was never 170K. Oh, Zuo. Let's see. Yeah, sorry. I know you asked about that quite a while ago. Oh, yeah, I didn't even know this reported, but I'm actually not super familiar with the stock anyways. It is easy to borrow. I'd keep this on watch. I think this could be another one of those stocks. It might just be kind of, well, you could already see it did hit resistance right here. Arguably. I think it's worth keeping an eye on. It's a lower price stock, could have a decent move. Right now, the formation really isn't that great, but it wouldn't take much for it to change because we've been just kind of flat here. Hold on. We've been kind of flat at this 1525 mark. So really over 1525, you could easily see a quick pop. And then really ultimately, if it can get over this pre-market top there at 1550, you could start squeezing up towards the 1650s. So there's that's just kind of a lot of what ifs, but it's probably still worth keeping an eye on. I do, Phil, I like NTNX personally. I'll probably be keeping an eye on that for sure. Also know if any of you guys are interested in joining into any of our services, any of them, whether that's chat room or the day trading courses or Elite's options trading, we will be doing a Labor Day sale. Haven't yet made the sale or any of the discounts yet, but that should be coming out in a couple days. So if you guys are on the fence or thinking about it, wait a couple days. Prices are going to be a little bit cheaper than what they are now. Save you guys a couple bucks along the way. Excuse me. So other than that, that's really all we got today. Exactly. That's all we have. That was a lot is what we had today. We had a lot. We went over quite a bit. Didn't really see any penny stocks today that looked really good, but the momentum is definitely starting to come back into the penny stocks, which is nice. I mean, give it another couple months. I would say right about October time, I think we're going to start seeing that volatility in the penny stock market pick up. I mean, you already got a taste of it like beginning of this week, late last week. So starting to see more of it. Yep. Trying to think anything else off the top of my head today. I don't really think. Oh, lastly, CGC. That's right. So we went over CGC, I think, the past couple days. Still on watch. Right, still on watch. Yeah, I would also watch this long today. This formation that occurred yesterday is also kind of a bottoming signal. So remember that formation. I wish I had more time to go over this with you guys, but this is kind of a formation of a bottom. It doesn't guarantee it, but this is a lot of times the kind of trading action we'll see when something is starting to bottom out and wanting to change direction. It almost happened on this day, right? And this day arguably, and this day it almost happened, but it didn't. This day it did because we kind of went down, went up, and then grinded up all day. See, like this day we kind of started up and then we faded all the way back down. This day we kind of started down, up, then we kind of just hung out and then back down. This day we started down, pushed up, held, then grinded all the way up. So we're starting to see those buyers being able to push that price up against the downtrend. So that right there is definitely kind of starting to give us that bullish feel that we've been looking for on CGC. And that was the thing, is really like the $25 mark was the support. So you can kind of see buyers were coming here, here, and then they got taken out, stop lossed out, and now we're starting to see buyers coming back in. So this could be one of those classic examples of like it was too obvious, right? It was too obvious of support. So rather than have it bounce at 25, they would shake the tree down and take out people's stop loss orders and then run the price back up. You kind of know that game. So I think that's what we might be seeing here on CGC. Obviously, it's a pretty solid downtrend for now, so it's really going against the grain trying to get it to go up right now, but still worth watching. All right. Oh, all right. With that being said, everybody, have a great day, and I will see you guys all tomorrow for another pre-market watch list. And as always, stay green, and I'll see you tomorrow.